Hi friends, welcome to Gain Profit. In this episode, we will discuss about basics of candlesticks. What is candlestick? A candlestick is a type of price chart used in technical analysis. The price action or direction of the market is reflected in the chart. Candlestick displays high, low, open, and closing prices for a specific time period. Here we discuss about the shape of candlestick. Candlestick contains two parts. First one is body of the candle and the second part is called wick or shadow or tail. There are two types of candlesticks, bullish candle and bearish candle. To distinguish the bullish and bearish candles from each other, they are displayed with different colors. Bullish candle consisting of green color represents upside direction. That means market is moving up. Bearish candle with red color represents downward direction, which means market is moving down. Bullish candle appears in green color consisting of open price, lower price, higher price and closing price as shown in the picture. In bullish candle, closing price is always higher than the open price. Upper wick shows the higher price and lower wick shows the lower price. Bearish candle appears in red color consisting of open price, higher price, lower price and closing price. In bearish candle, closing price is always lower than the open price. Upper wick shows higher price and the lower wick shows lower price. So far, we have discussed about basic parameters of candlesticks. Now, we will analyze different types of charts to study the price action. Japanese candlesticks chart is very popular and is used by most of the people throughout the world. Another type of chart to study the price action is line chart. This chart is not familiar and very few people will use it in technical analysis. Bar chart. Bar chart also appears like Japanese candlesticks. The only difference is body of the candle also shown as bar and it is known as bar chart. This chart is also not familiar and is used by very few people in the world. How to read candlestick? Here we will know the price action of bull candle where the buyers are in control. Candle opened here. After reaching the higher price, there may be some price rejection by the sellers or profit booking by the buyers will appear in the form of small wick closed just below the higher price. Long body and small wick candle represents buyers are in control or strong bullish price action. In contradiction to the previous candle, this candle is consisting of small body and long wick. The candle began here, go longer way to upside direction. After reaching the higher price, strong price rejection by the sellers with a long wick formation. Candle is closed very nearer to the open price. Small body and long wick candle represents sellers are in control or strong bearish price action. Friends, to understand the direction of the chart, we need to have clear idea on each and every type of candlestick formations. For better understanding of viewers, we show the path where the candle began, how it is traveled, and where it is closed. In this picture, we will learn different types of bullish candlestick patterns. As discussed earlier, a candle with long body and small wicks in bottom and top as well represents bullish price action, where buyers are in full control. This candle describes that open price and closing price are very nearer by forming a small body, and rejection of higher and lower prices represents a doji type of price action. It means both the buyers and sellers are present with low volumes. Generally, small wick and small body candle tells us an indecision pattern. This type of candle tells us the strong rejection of lower price by forming a long wick. The candle opened here, initially traveled towards downward direction. Thereafter, bulls were entered and high volumes of buying taken place and closed just above the open price by forming a long lower wick and small body. Now, we will discuss about different types of bearish candlestick patterns. A candle with long body and small wick represents bearish price action, where sellers are fully in control. This candle shows open price and closing price are very nearer by forming a small body, and rejection of higher and lower prices represents a doji type of price action. Generally, small wick and small body candle tells us an indecision pattern. This type of candle tells us strong rejection of higher price by forming a long wick. The candle was opened here, initially traveled towards upside direction. Thereafter, bears were entered and high volumes of selling taken place, closed just below the open price by forming a long wick and small body. Friends, let us summarize the key points. Buying and selling, these two actions will decide the price action in the chart. Buyers are called bulls and sellers are called bears. Candlestick chart shows us who is leading the market, buyers or sellers. If bulls are in control, market will go up. If bears are in control, market will go down. Body represents strength of the candle. Higher the body size, stronger the sentiment. Wick represents price rejection. Higher the wick size, weaker the sentiment. Friends, if you like our presentation, please subscribe and tap the bell icon. In this section, we will discuss about the doji and various types of doji formations. Normal doji, long-legged doji, dragonfly doji, gravestone doji. Doji is a situation where open and closing price are similar. The size of the wick indicates the intensity of price rejection. Small wick represents weak price action and small volumes. Long wick represents strong price rejection. Doji. Doji appears like a cross with long wick and very small body. In doji, open and closing prices are one and same. In candlestick chart, doji represents no price momentum or directionless. Doji means that bulls are buyers and bears or sellers are well matched and none of them are stronger than the other. Therefore, doji means indecision. Hence, after a doji, the trend can be continued, reversed, or start moving sideways. In this chapter, let us narrate different types of dojis. Some dojis represent bullish reversal and some others represent bearish reversal, depending on their position in the chart. There are different types of dojis, which is dragonfly doji, gravestone doji, hammer, inverted hammer, shooting star, hanging man, morning star doji, and evening star doji. So far, we have discussed about different types of dojis. Now, we will know the characteristics of various types of dojis. Let us begin with dragonfly doji, which is also known as a bullish reversal pattern. Dragonfly doji. Here, we will discuss about the dragonfly doji, which looks like a dragonfly. Dragonfly doji consisting of very long wick and no body, where open and closing price are equal. Let us know the path. Candle was opened here, initially traveled towards down direction, thereafter took reversal by rejection of lower price and closed exactly at the open price. This candle is formed due to the rejection of lower price, which is also known as bullish reversal pattern. Dragonfly doji will play a significant role when it is formed at the support level in the chart. In this example, we will analyze formation of Dragonfly doji. Initially, price is facing towards downward direction. Dragonfly doji is formed at the support level by rejection of lower prices. It means there is a lot of fight between buyers and sellers. Finally, buyers took the lead and the price is up. For better understanding of the price action in the chart, we need to have a clear knowledge on formation of wick. The size of the wick will determine the intensity of price rejection. Friends, coming to another example, here we find Dragonfly doji is formed at the support level by rejection of lower price and the price action moved to upside direction. Let us see another type of doji called gravestone doji, which is bearish reversal pattern. Gravestone doji. In this picture, we will know about gravestone doji, which look like a gravestone. Gravestone doji is consisting of very long wick and no body, where open and closing price are one and same. Candle was opened here, initially traveled to upside direction, thereafter rejected the higher price, came down and closed exactly at the open price. As we can see, that initial move was supported by bulls and this was encountered by bears who drove the price back to down. We can consider this psychology potentially more bearish signal when it happens at resistance level. Friends, let us take an example. Initially, the direction was up. Gravestone doji is formed at resistance level by rejection of higher price and the direction is down. Let us see another example. Gravestone doji formed at resistance level by rejection of higher price and took down direction as shown in the chart. Friends, if you like this video, please do like, subscribe and hit the bell icon for releasing more and more videos. Coming to another type of doji is hammer, which is an important bullish reversal pattern. Hammer. Another important type of doji called hammer and it appears like a forged hammer. Hammer consisting of very long lower wick and small body. Candle was opened here and traveled towards downward direction, took reversal by rejection of lower price, went to upside direction and closed little bit above the open price. Hammer is formed on account of big fight between bulls and bears. Finally, bulls have shown their strength and taken the price to upside direction. Formation of hammer is known as an important bullish reversal pattern. Here we will find formation of hammer in the live chart. Hammer will play a significant role when it is formed at the support level by rejection of lower price and further direction changes from down to upside. Coming to the psychology of hammer, when the previous direction of the chart is down or in sideways, thereafter hammer is formed, we need to wait till further formation of green candles to confirm the upside direction. This is another example of hammer formation. Hammer is formed at the bottom of the chart by rejection of lower price and took upside direction. We are discussing about different types of doji formations. Let us understand another type of doji, inverted hammer. Inverted hammer. Coming to another type of doji is inverted hammer and it's look like a reverse hammer with a long upper wick and small body. Candle was opened here, initially traveled upside and rejected the higher price with a long wick and closed a little bit above open price with small body. It indicates that buying pressure has been superseded by selling pressure. But the selling pressure was not strong enough to drive the market towards down. Where the market is in downtrend or sideways, inverted hammer is formed at support level. It means there was a fight between buyers and sellers have failed to bring the price down. The final result is bulls have taken control over the market and maintained the price at upside direction. Mere formation of inverted hammer at support level will not be considered as change of direction. The change of price is considered only when it is supported by next bullish candle. Friends, we will try to analyze whether the inverted hammer is bullish or bearish. After a long downtrend, the formation of an inverted hammer is bullish because price hesitated to move towards downward direction. Sellers pushed price back to open, but increasing price shows that bulls are testing the power of bears. Let us see formation of inverted hammer in the real chart. Previous direction was down. Sellers have tried to push the price to further lows. Thereafter, inverted hammer formed at the support level and took the price upside direction. This is another example of inverted hammer. Here we see that initial direction was down. Inverted hammer is formed at the support level and took the price to upside direction. Friends, another type of doji is shooting star, which is an important bearish reversal pattern. Shooting star. Its structure look like a meteoroid or falling star. It is considered to be an important bearish reversal pattern. Candle was opened here, initially traveled towards upside direction and rejected the higher price, closed a little bit below the open price by formation of a very long wick and small body. Shooting star type of doji will act as trend reversal signal when it is formed on the top of the chart or at resistance level by rejection of higher price. Here we see formation of shooting star at the resistance level by rejection of higher price and took the price to downside direction. Generally, shooting star when formed during sideways or in uptrend, we need to wait for next bearish candle to confirm its further downside direction. Guys, this will be another example of shooting star formation. Here, we see the shooting star formed at resistance level by rejection of higher price and the direction is down. Let us understand the characteristics of another type of doji, hanging man. Another important type of doji called hanging man. It appears like a hanging Spider-Man as shown in the picture. Initially, the candle was opened here and traveled towards downward direction, rejected the lower price. Thereafter, recovered the price by forming a long wick and closed just below the open price with small body. Hanging man will form with a tug of war between buyers and sellers. Only hanging man formation will not guide us the direction of the chart. We need to wait till confirmation by immediate next candle with solid red. Hanging man and hammer looks like similar, but hammer contains small green body, will form at support level and is a bullish reversal pattern, whereas hanging man with small red body will form more often at resistance level. Let us take an example. In this chart, previous price action was in uptrend. Hanging man was formed on the top or at the resistance level to show its potential strength of bears in probing the lower prices. Next candle closing below the hanging man will confirm its further down direction. We will take here another example of hanging man. Previous price action was in sideways. Hanging man formed at resistance level, duly supported by next solid bearish candle by pulling down the price to further lows. Friends, if you like this video, please do like, subscribe and hit the bell icon for releasing more and more videos. Friends, let us see another type of doji is called Morningstar doji. Morningstar doji. Morningstar doji, also called as a three candle bullish reversal pattern. First red candle was opened here, continues the down direction and closed here. Second green doji candle is formed, which is an indication of the price indecision. Neither bulls nor bears are proved their strength. Third candle reveals that bulls have shown their potential. Candle was opened here, traveled upward direction and closed here by formation of a solid green candle. Formation of Morningstar doji at support level is considered as the best bullish reversal pattern. Coming to the psychology of Morningstar reveals who is in control, buyers or sellers. First candle consisting of red real body continuing the trend in the downward direction. Second candle ideally gaps down at the open and the candle will have a small body either red or green. Second candle look like a star referred to in the name of morning star. And the third candle ideally gaps up than the second candle. The third candle closing above the high of first candle would be considered as more bullish. For confirmation, further price action should be trading above the high of third candle. Let us get into an example of Morningstar doji, which is known as bullish reversal pattern. Previous price action was in downtrend. Morningstar doji is formed at the bottom or in the area of support level, leading the price to upside direction. This is another example of Morningstar doji. After tight consolidation, price action dipped the market with a red candle, followed by an indecision doji is formed. Subsequent green candle with full body confirms the bullish reversal pattern and the price turns to upside direction. Friends, let us see another type of doji, evening star doji, which is a bearish reversal pattern. Evening star doji. Evening star doji, also called as a three candle bearish reversal pattern. First green candle was opened here, continues the up direction and closed here. Second red candle is formed, which is an indication of price indecision. Neither bulls nor bears are proved their strength. Third candle reveals that bears have shown their potential. Candle was opened here, traveled towards downward direction and closed here by formation of solid red candle. Formation of evening star doji at resistance level is considered as the best bearish reversal pattern. Coming to the psychology of evening star reveals who is in control, buyers or sellers. First candle consisting of green real body continuing the trend in the upside direction. Second candle ideally gaps up at the closing price of first candle and the candle will have a small body either red or in green. Second candle looks like a star referred to in the name of evening star. And the third candle ideally gaps down than the second candle. Third candle closing below the low of the first candle would be considered as more bearish. For confirmation, further price action should be trading below the low of third candle. Let us get into an example of evening star doji, which is known as bearish reversal pattern. Previous price action was in uptrend. Evening star doji is formed at the top or in the area of resistance, leading the price to down direction. This is another example of evening star doji. After slightly an uptrend, price action raised the market with a green candle, followed by an indecision doji is formed. Subsequent red candle with full body confirms the bearish reversal pattern. After that, the price action took the down direction as shown on the picture. Hey guys, let us know what kind of topic you want us to cover in the next coming videos. Please share this video to all your family and friends. Please leave a comment below to express your opinion. Thank you.